Hello friends, my name is Timid Bodon Chatterjee. I am the mentor and managing partner of TCN Global and Economic Advisory Services LLP. Today we are going to discuss a very important and relevant subject on insurance. The discussion will take place on term insurance policy. Friends, I would like to explain you little more about the subject so that you can take a very serious decision about your future plan or future financial plans. Friends, in life insurance, we find mostly two types of policies. Normally, I would say rather 90 to 95% people take endowment policy. What is endowment policy? It is a policy which is taken to cover risks of the life as well as investment. In other words, whatever insurance premium you pay, a certain part of the insurance premium is transferred to the risk premium category of the insurance company. That is their business. They take premium and take the life risks. And another part of your premium is put on investments. Whatever you get after the maturity, you basically get the investment part which you have invested with the insurance company by way of paying monthly, quarterly or annual insurance premium. In other words, in an endowment policy, the premium is divided into two parts. One is life risk, which is the earning of the insurance company and it is not returned, and another part is for investments. You may also be knowing the fact that in insurance business, higher the age, higher the premium. Suppose if you want to take a policy of 2 lakhs at the age of 18 years, and if you want to take the same policy at the age of 35 years or 50 years, although the coverage value is same, but the premium will be very high in case your age is higher. So therefore it is always suggested that if you take a policy of insurance, better to cover at the initial stage itself, that means immediately after employment. But that is a separate issue. We are discussing about the types of policy. One is endowment, another part is called term insurance. And we are going to discuss about this insurance. This term insurance is absolutely insurance. It is not in any way connected with your investments. In other words, the premium which you pay for term insurance to cover your life is basically as the cost of risk. And it is the income of the insurance company against which they pay the loss, if any, in the life of anyone. And that is their business. So, difference is that in the first part, in the endowment policy, the policy is not only for the life risks but also for giving you a return of investments. But in the case of term insurance, there is no question of return on investments. It is only a premium paid to cover your life risk. Now the question is that which policy would you take it? Which policy would you suggest to take? Now here it depends on the person to person. Few people feel that investment is my job. Investment is not the job of the insurance company. I know what is to be invested. I know where I can put money, whether in fixed deposits, securities, mutual fund, etc. But life is a very big risk which none of us can take. So therefore many people feel that instead of taking an endowment policy, better to take the term insurance policy. That means you have a specific agreement with the insurance company that in case of death, your family member will get a certain lump sum amount which you are covering for insurance. Obviously, the premium will be very less in case of term policy because your premium consists only on cost of risk. But whereas in case of endowment policy, your premium includes two aspects. One is cost of risk, another is the investments. So therefore, in an endowment policy, you can hardly take 2 lakhs, 3 lakhs, 4 lakhs, 5 lakhs, 10 lakhs worth of policy as a general employee. But in case of a term policy, since the premium is only on account of the life risks, you can take a higher value. But again, I would like to tell you, in case of term policy, you are not going to get any money after maturity of the policy because you are paying only a premium to cover your life risks. Now, there are two sets of people. One people feel, no, insurance should also take care of my investment as well as risk. They will go for endowment, but the value will be restricted because premium will be very high. And there are people who feel, no, I will take term policy to cover my risks, life risks. In case I am not there, my family will not be in trouble. And they take a higher value because the premium is very less. So friends, this is the time to take a decision whether you should go for a term policy or endowment policy. Assuming you are taking a term policy, I would like to tell you there are certain issues which you have to consider. First, term policy is very cost effective. So you can have a higher risk amount, you can take a higher coverage amount at a nominal insurance premium. And if you take this particular policy at the young age, the premium will be further lower because life risk is almost not there. So that is very important point. Second point, you need to consider the value of the coverage. This is a very, very important. Unfortunately, in our country, valuation is not considered at all. Okay, do it for 20 lakhs, 30 lakhs, 50 lakhs, 1 crore, something like that. There is no basis. Now, I have made certain basis which is not sacrosanct, which is not a law, which is not a rule. But I can tell you that you can consider the value of the term policy based on your existing family expenditure. Assume you are not there and your family is to run. So what is the family expenses per month? What is the educational cost? What is the existing loan, term loan for any car, or if you have taken any loan for your housing? So consider those issues and find out what could be the value which, if paid at an unfortunate incident, your family will run smoothly. Now this is a little bit computations, but to ease the matter, I would like to give you a very thumb rule. Again I repeat, it is a thumb rule. According to me, if your earning is multiplied by annual earning is multiplied by 10 times, that means suppose your annual earning, gross earning is for example 5 lakhs. In that case, you should at least take 10 times of your annual income, that is 50 lakhs rupees. This is a thumb rule valuation. Another way of valuation would be, what is your monthly expenses? That you multiply by 150. That means you are getting two figures. One, 10 times of your gross annual income. Another, 150 times of your monthly expenses. Take these two figures and whichever is the higher figure, you go for coverage. Almost 80 to 90% cases, you will find if there is any unfortunate event, that proceeds from the insurance company will certainly take care of your annual or committed expenditures. So these are the 5 important areas which I would like to discuss. I have said the policy value. So policy value condition is very clear, 10 times of your annual expenses, annual income, and 150 times of your monthly family expenses, whichever is higher. So policy value is already discussed. Again I say that is not the rule or any sacrosanct principle, this is based on my analysis. Period. Now every insurance has its period. Now what will be the period of the policy? Would you like to continue till 99 years or 100 years till you leave? No. You consider in which year you will be almost equal to the amount of investments which will be equivalent to your policy value. Suppose you are going to take a policy of 50 lakhs rupees. Now you calculate to have a total liquid and illiquid assets of rupees 50 lakhs, how many years you need? Say today is 2022. You feel by 2042, that means after 20 years, you will have a total investments of around 50 lakhs. I will suggest you take the policy of 50 lakhs for 20 years. 21st year, even if there is anything happens, you have already the investments. So why should you continue the term policy? Because policy means cost. So therefore, you calculate what is that policy value you are taking coverage and how many years you need to take to reach to that policy value as your own investments. If you reach earlier, fine, no need for a term policy because you have the investments and your family members will not be in your trouble in your absence. Third is add-on. This is a very important area. You have taken a term policy, say 50 lakhs, period is 20 years. Now you discuss with your insurance company, well, let me know which are the add-on benefits I am getting. Which are the add-on benefits? For example, you can say if I have an accident and I die, my family members will get double the value of the policy. This could be another add-on. Or if you say that in case there is any accident, my future payment of premium will stop, but coverage of risks will continue. Like that, this sort of coverage you can take it additionally in the same term policy. But it depends on the discussions with the insurance company, with the underwriters, to what extent they are ready to provide you these add-on benefits. But these are all available. Next is you have to find out which insurance company you would go with. There are today, after privatizations, there are several insurance companies are available. You see the claim settlement percentage of each and every insurance company. To what extent they have claims settled? They have settled the claim in respect of the claims raised in the past. Somewhere you will find 98, somewhere you will find 99, somewhere 99.5. You consider those, because those who have settled the claims in the past, they will certainly take a priority. So that way you can select the insurance company also. And next is peace of mind. I know you have to pay the premium. I also know, or you also know, that this premium is not coming back to me until and unless I die. So there will be always a dilemma in your mind that I am paying something extra. So you see that how much amount of premium you can pay and still you can have a peace of mind. This cannot be defined. This cannot be analyzed. It cannot be formulated in any formula. But a peace of mind is also necessary. You should have a satisfaction. Yes, I have taken a 50 lakhs policy, 20 years. So in the next 20 years, whatever happens to me, my family is protected. If that peace of mind is there, you should not mind to fork out some money on account of insurance premium. But finally, I would like to tell you that whenever you go for term insurance policy, you should consider these 5 factors. Value is very, very important, which is neglected in our country. It is taken just ad hoc or an arbitrary basis without considering your commitment, without considering your existing loans. Period is very important. I have explained you. Add-on cover, that is very important. Claim settle percentage is very important to select the right insurance company who can underwrite your risk, and peace of mind. Friends, these are the 5 important issues which you need to consider before taking a term policy. But I must say that term policy is an excellent policy, and every individual, even if he takes a endowment policy, because endowment policy is for a limited value, 3 lakhs, 4 lakhs, 5 lakhs. If you have to take a endowment policy of 1 crore, 2 crores, you cannot pay the premium, which you can pay in case of term policy. So therefore, even if you have an endowment policy, you must have a term policy so that your family is totally covered financially and they can lead a very respectful life, including your children's future employment, future educations, etc. Friends, again I will request you, if you like these deliberations, if you like my presentations, and if you like the subject of my selection, please like it, please share it, and also please subscribe it. Your subscription will give a huge strength to come out with similar relevant financial matters which will be of great importance to all of you. So thank you very much for your patient hearing. Thank you.